I was one of the participants at an investors meet last week, and a question that was posed to all of us was, what is the outlook for stocks in the short and medium term? Now, one of the fund managers says, well, there are so many factors which we cannot gauge. We do not know whether the US Fed is going to hike interest rates in June or July, and what is going to be the outcome of the Brexit vote, that is the referendum regarding Britain's exit from the Eurozone. As far as India is concerned, they say we don't know how the monsoon is going to perform, what shape it is going to take, whether there's going to be bountiful rains or not. So there are too many factors which are uncertain, and in such an uncertain environment, unless and until each of these factors have been out of the way, it is difficult to predict which way the stock markets are going to go. Sure, there are so many negative factors. I agree. But is that what you're going to tell investors? And what are the investors going to do then? They need to know some concrete analysis, and they need to have some concrete answers as to what is the likelihood of various events happening. For example, if you were to ask me, I believe that the chances of a US Fed rate hike in the month of June 2016 is close to zero. Reason: the Brexit, the British referendum, is just 6 days after the Federal Reserve meeting, and there's a lot of uncertainty whether Britain will remain a part of the Eurozone or not. If it exits, naturally there'll be great volatility in global financial markets, and Fed would definitely not like to do something which would only exacerbate the effects of volatility arising out of a negative British referendum. Now, after June comes July, the next Fed meeting. Well, personally, I think they will not raise interest rates even in July, because then you're starting to get very close to the US elections in November. And when such a thing happens, you don't want to sound too partisan one way or the other. So I believe that a US interest rate hike is not on the cards. Coming to the second scenario, the British referendum, I believe Britain is not going to exit the Eurozone. There are various factors that lead me to believe so. Britain will remain a part of the Eurozone, and between now and June 23rd, you will see a tremendous fall in most global stock markets. 7 to 8% is what I believe should be the fall in most global indices, after which a relief rally should take place, because if Britain decides not to leave the Eurozone, and Fed also does not raise interest rates, then the global money inflow into emerging economies will continue. The world is going to heave a sigh of relief, and this is going to engineer a relief rally post June 23rd, which should last for 3 to 4 weeks. It's going to, I think it's going to last for about 3 weeks. It's going to be very powerful in nature. So this is, and as regards the third scenario, the Indian monsoon is concerned, I don't think the monsoons are going to be very favorable this time either. There's going to be a heat wave not only in India but also in the United States and Africa, major agricultural crop growing countries, and this is also going to have an impact on many economies and many countries. So here you are. I've tried to dissect all the three important factors, and I've given you my predictions. So a steep fall in global stock markets between now and June 23, followed by a relief rally thereafter. I think that's enough information and advice for the short term. Medium term outlook we'll talk in another presentation. Happy investing. Take care. Bye bye.